Welcome to the deep dive.
Glad to be here.
Today, we're plunging into the latest from the Indian business titan, Reliance Industries. We're looking at their financial year ending March 31st, 2025.
Right?
We've sifted through their official reports, the analyst call transcript, the whole 9 yards, really trying to bring you the crucial insights.
Yeah, there's a lot to unpack.
Our mission, to decode what's happening within this, well, massive conglomerate in a way that's clear, engaging, and gets you up to speed without needing an MBA.
Exactly. We've got a pretty comprehensive set of data here. Consolidated figures, segment specifics, even the analyst Q&A.
Gives a good multi-angle view.
It really should. A strong grasp of their performance and where they might be heading.
And speaking of heading somewhere fast, here's a stat that really grabbed me. Geo Hotstar
Yes.
became the world's second largest paid streaming platform in just 10 weeks. 10 weeks.
It's pretty staggering when you think about it.
Think about that, rivaling Netflix's global paid subscriber base in that short a time. So how did they pull that off? And what does it tell us about their strategy?
Good questions. Lots to discuss there.
Let's dive in. Starting with the 30,000-foot view, their consolidated financial performance.
Okay, so the big picture. Reliance achieved a 7.1% year-on-year growth in revenue. Pretty solid.
Okay.
Their EBITDA also saw an increase about 2.9%, and net profit that followed suit. Same rise, 2.9% year-on-year.
2.9% on profit and EBITDA 7.1% on revenue. So margins may be under a bit of pressure.
Well, what's interesting is that these overall figures, they actually mask quite different performances across their various segments. Some parts really powered ahead.
Right.
Others face some, headwinds. We'll definitely get into that.
Okay.
But importantly, their reports, they really emphasize a strong balance sheet.
Yeah.
Gives them considerable financial flexibility, firepower for investment.
Absolutely. And you really can't discuss Reliance today without focusing on Geo Platforms, their digital powerhouse.
Oh, definitely not. The numbers there are, well, genuinely impressive.
Go on.
Geo Platforms continues its strong climb. We're looking at a significant 17% year-on-year increase. That's in both revenue and EBITDA.
17%. Wow. What's driving that?
It seems to be mainly a few key things.
Right.
First, the flow-through of tariff adjustments we've seen. Second, the continued expansion of GeoFiber, their home broadband.
Reaching more homes?
Exactly. And third, just a massive jump in data consumption by users.
And when you say massive jump, the figures are almost hard to grasp.
Yeah, data traffic surged, get this, 20% year-on-year, reaching 49 exabytes in just one quarter.
49 exabytes. What does that even mean in the global context?
Well, it puts Geo in a very, very significant position. They are now effectively the world's largest data company, even surpassing China Mobile.
Bigger than China Mobile on data traffic.
On data traffic, yes.
Yeah.
And look, this isn't just a bragging right. It positions them incredibly strongly for, the future of AI, data-driven services in India, a huge potential edge.
And a key driver here must be 5G.
Absolutely. The rapid adoption of 5G is critical.
The number is mind-boggling, 191 million 5G subscribers.
It's huge.
They're highlighting this is the largest base outside of China. And they seem confident in their coverage claims, too.
Yeah, they're backing up the Pan-India 5G coverage claims with data from Ookla, which is, a well-known network intelligence firm.
Right.
What's particularly interesting, I think, is their free-to-pay strategy for getting users onto 5G.
Explain that.
Well, by initially offering 5G data usage at no extra cost, they're like incentivizing users, get them to experience the faster speeds, the lower latency.
And then hope they get hooked.
Exactly. It drives higher data consumption, more content engagement. It's a similar playbook to their initial 4G rollout, actually.
Oh, okay.
And it represents a huge future revenue opportunity as these users get used to that better experience.
They even cited the Mahakumbh event, that incredible gathering, what was it, over 660 million people.
Yeah, massive.
As an example of their network strength. Apparently, their infrastructure handled these unprecedented data demands without a hitch.
It absolutely does put things in perspective. It's a real-world stress test, demonstrates the network's robustness. And beyond mobile, their fixed wireless access solution, Geo Air Fiber. That's quite clever, too.
The home broadband without the fiber cable.
Right. They've developed their own point-to-multipoint technology. So essentially, one outdoor unit can serve multiple homes.
Brings down costs.
Significantly.
Yeah.
Brings down deployment costs, makes really efficient use of the radio frequencies, spectral efficiency, they call it.
And the ambition there.
Massive. Connecting 100 million homes. That's the target.
And it looks like they're gaining traction already. The report mentions they accounted for, what, 90% of all new home wireline connections in the industry?
In the last 6 months, yeah. And a significant lead in air fiber subscribers compared to competitors. So the strategy seems to be resonating.
Got it. And they're doing enterprise 5G too.
Indeed. They're successfully deploying private 5G networks for enterprise clients. These are, dedicated, secure network slices.
For factories, things like that.
Exactly. Offering highly reliable, low latency connectivity, crucial for industrial automation, enhanced security. They're already using it at their own facilities in Jamnagar.
Shows the versatility.
Definitely shows the versatility beyond just consumer mobile.
Okay, let's shift from digital to physical. Reliance Retail. Huge footprint in the Indian consumer market. How are they doing?
Reliance Retail reported strong gross revenue growth, 8% for the full year,
Okay.
but with a significant acceleration in the fourth quarter, up 16% growth then.
Strong finish.
Yeah. And their full-year EBITDA saw a healthy 9% increase. It seems they strategically focused on streamlining operations in the first half.
Tidying up.
Kind of. Which appears to have set the stage for that really robust performance in the second half.
The sheer volume, though. 1.4 billion transactions in a year.
That's staggering.
And a registered customer base of 349 million. That's almost the population of the U.S.
It truly is a massive scale. And they're making significant strides in quick commerce with GeoMart.
The super fast delivery space.
Right. They've seen an impressive 2.4 times quarter-on-quarter growth in daily orders there.
2.4 times, quarter on quarter.
Yeah. Fueled by their aggressive push towards under 30-minute delivery. That's now reaching over 2,000 stores and 4,000 PIN codes.
Wow.
And they added those quick and scheduled tabs on the app. Seems to be making it more convenient.
Competing hard there.
Clearly ambitious. Competing directly with established players, capitalizing on those changing consumer habits.
And they're also expanding the variety on GeoMart. More sellers, more products.
Absolutely. Their third-party seller base grew by a substantial 22% year-on-year. Live selection products up 10%. Their subscription program's also showing strong momentum. And another standout, their own consumer brands business, FMCG.
Right, their own label stuff.
Yeah. It's become the fastest-growing FMCG business in India, apparently. 11,450 crore in sales in just its second year.
11,000 crore? In year two, that's rapid.
It's impressive growth in a very competitive market.
And they've officially launched Shein in India now.
They have, offering a massive catalog, over 12,000 items. That's a bold move in fashion e-commerce.
How's their existing fashion and lifestyle business doing alongside that?
Their established fashion lifestyle is also doing well. Positive like-for-like growth, strong double-digit overall growth.
Right.
And they're expanding their luxury platform, Ajia Luxe. Now features 800 brands.
800 luxury brands. Wow.
And the jewels business, also seeing consistent growth, partly driven by rising gold prices, pushing up average transaction values.
Makes sense. Grocery seems to be a real engine for them, though.
It certainly is. Their grocery business is showing industry-leading growth, and that includes premium formats like Fresh Pick and Go Fresh.
Targeting wealthier areas.
Strategically expanding there, yes. Even their after-sales service arm, Rescue, is expanding. 13% customer growth year-on-year on-demand warranty services in over 300 cities now. The GMD business, that's electronics B2B and B2C, saw remarkable 76% year-on-year growth.
76%.
Yeah, and their own brands business expanded by 30%. With a 60% increase in the number of merchants offering those brands.
So it sounds like they're not just expanding everywhere, but also focusing on the store experience itself.
Exactly. They've been actively renovating stores, optimizing product assortments. This focus on enhancing customer experience, it leads to higher sales and, crucially, more efficient inventory management. That's a key indicator of operational efficiency.
Right, keeping less stock hanging around.
Precisely.
Okay. Now, let's turn our attention to a more recent development, GeoStar, the combined media and entertainment arm, formed after that merger in November 2024.
Right, relatively new entity.
What can you tell us about its initial performance?
Well, given the merger timing, these results cover roughly 5 months of operations.
Okay.
In that period, GeoStar reported significant revenue, 10,006 crore, and an EBITDA of 774 crore. The GeoStar platform in particular has seen phenomenal traction.
We touched on it earlier, but that peak number, 503 million monthly active users in March 2025.
Astonishing.
And the record peak live viewership, 61 million during the Champions Trophy finals. That's just a massive audience.
It really highlights their immense reach, their ability to attract and retain a massive user base. They've also maintained an industry-leading TV entertainment viewership share, around 34%.
34% share. Strong.
And their content library is vast, over 320,000 hours. They claim that's 6 times larger than, say, Netflix or Amazon.
6 times. Wow.
Their stated goal is ambitious,
Right.
reach 1 billion screens. And they're even seeing, interestingly, a resurgence in the pay TV market. Subscriber growth there.
So well-positioned in media?
Seems like they're positioning themselves to be a dominant player in Indian media and entertainment.
Okay, let's shift gears again to the more traditional energy side of Reliance, their oil to chemicals or OTC business. Sounds like this sector faced some significant challenges over the last year.
The OTC segment definitely navigated a tough market, a notable decline in annual margins.
Why was that?
Primarily a combination of factors. A slowdown in global demand for fuels and chemicals,
Right.
coupled with increased production capacity coming online, particularly in China.
More supply, less demand pressure.
Exactly. Puts significant downward pressure on fuel cracks. You know, the difference between crude and refined product prices, and also chemical margins.
We're talking fuel cracks down 36 to 41%, and chemical margins down 2 to 13. Those are substantial hits.
They are indeed. Big impacts on profitability. However,
Yes.
these weaker international margins were partly offset by robust domestic demand within India for key products like gasoline, diesel, ATF, also polyester and polymers.
So India's own demand helped buffer it.
It did. Plus, increased domestic sales of their fuels through their GeoBeep joint venture. That also helped mitigate some negative impact.
UUBP.
And Reliance emphasizes that despite these headwinds, their OTC business actually outperformed many of their global peers.
And operationally, they managed their highest ever annual total throughput, 80.5 million metric tons.
Precisely. Suggests they really focused on maximizing operational efficiency, keeping the plants running full tilt.
Right.
And GeoBeep, it made a significant contribution to that domestic fuel placement, generated an EBITDA of 2,500 crore for the year.
2,500 crore from GeoBP.
Yeah.
Significant.
And they're continuing to expand that network. The retail outlets, the EV charging points, the CBG and CNG stations too.
Okay. Looking ahead in O2C, they have big investments planned. Polyester expansion.
That's a key part of their 75,000 crore capex plan for O2C.
75,000 crore. Huge number.
It is. They anticipate the benefits of this polyester expansion will start becoming visible in earnings around fiscal year 2028.
FY28. Okay.
Yeah.
A few years out.
Yeah. They're also strategically investing in an integrated vinyl chain project, EDC, VCM, PVC, CPVC,
To make plastics, basically.
to address the domestic shortage of these crucial materials, yes. That project's expected to commission in phases, starting 2026-27, and they're building out the logistics infrastructure to support it.
So the focus there is
Maximize margin capture, secure competitive raw materials crude, and expand domestic sales, manage freight costs diligently, and they're also actively working on increasing capacity for recycling PET plastics.
got it. Now let's turn to what's arguably the most future-oriented part. New energy. Massive investments here.
Their approach here is remarkably comprehensive. An end-to-end integrated view of the solar value chain.
Meaning?
Everything from making polysilicon, the base material, all the way to finished solar panels,
The
including the glass, the PoE encapsulant,
whole shebang.
pretty much. They've already commissioned their first gigawatt-scale solar module manufacturing line. It's BIS certified, meets Indian quality standards,
Got it.
one of the largest such facilities.
First gigawatt line done.
And that's just the initial phase of an ambitious 10 GW plan, modular expansion.
Where will those panels go initially?
Primarily, these high-efficiency modules will be used for their own massive green energy generation project in Kutch,
Okay, using their own supply.
but they retain the flexibility to sell them in the open market as well.
And they're heavily into green hydrogen too, right?
Yes, developing a large-scale green hydrogen ecosystem in Kandla. That includes manufacturing electrolyzers through a strategic partnership with Nel.
Nel, the Norwegian company.
That's the one, a leading global player. The significant euro 75,000 crore capex for their new energy gigafactory that's largely committed now.
75,000 crore again. Wow. When do they expect significant solar power generation?
Around 2027-2028 is the time frame mentioned,
Okay. And batteries.
making substantial progress there too. Lithium-ion phosphate batteries. Battery packs expected in 2026, followed by manufacturing the battery cells themselves.
The full value chain?
That's the vision, including key battery materials, Plus, they're active in bioenergy. 10 commercial biogas plants already operational, target of 55. Advanced biofuels, energy plantation projects too.
Covering a lot of green bases.
Very broad approach.
Okay, finally, let's briefly touch on their upstream oil and gas business.
Right. So while production from their main KG-D6 block was slightly lower in the last quarter, their overall oil and gas EBITDA actually showed a record performance for the entire fiscal year.
Interesting. How?
They're strategically focusing on using multilateral wells. These advanced drilling techniques, they yield significantly higher gas output compared to traditional vertical wells.
How much higher?
We're talking maybe 12,000, 13,000 standard cubic meters per day from multilaterals versus around 4,000 from verticals. Big difference.
Okay.
And they're actively doing workover jobs on existing wells, looking for additional drilling spots to kind of mitigate the natural production decline from mature fields.
Makes sense. Price realization.
Interestingly, the price they got for their KGD6 gas increased year on year, although the price for their coal bed methane, CBM, actually decreased over the same period.
Mixed bag on prices then.
Seems so.
We also have the transcript from their analyst meet. Sounds like they emphasized having it in person this time.
Yes, it was a physical analyst meet. Signals the importance they place on that direct engagement with the investment community.
What were some key insights from that interaction? Anything jump out?
Well, the transcript details some pretty insightful discussions. Key Reliance execs were there. H.A.V. Srikanth, the joint CFO. H.H. Anshuman Thakur, head of strategy, heads of various business segments.
And the analysts asked tough questions.
Yeah, analysts like Manisha Dukia from Goldman Sachs, Sabri Hazarika from MKI Global, they raised pertinent questions across a whole range of topics.
Like what?
Things like the specific financial contributions of GOB, the expected timelines for that big polyester expansion, progress on the new energy projects, Geostar's growth strategy and content plans. Also, the current discounts on crude oil and the outlook there, timelines for solar manufacturing ramp-up, details on battery tech, the partnership with Nel for alkaline electrolyzers for hydrogen.
So lots of details sought.
Definitely. Even a debate on whether television advertising revenue is really bouncing back strongly post-COVID. These exchanges, they offer more nuanced understanding of their strategic thinking and, future expectations.
Okay. So bringing it all together then, what are the key takeaways from this deep dive into Reliance's performance for the year ending March 2025?
Well, I think we've seen a company demonstrating really robust growth in its digital services and retail businesses,
Right, geo and retail powering ahead.
which has effectively balanced some of the challenges faced by their O2C segment in what's been a volatile global energy market. They are making substantial, clearly long-term strategic investments in the new energy sector. That signals a real commitment to the energy transition.
No small bets there.
Definitely not. Overall, their strategic focus seems to be on tech innovation, aggressive customer acquisition across all platforms, and just significant capital investment. It positions them for continued growth and, frankly, transformation within the Indian economy and beyond.
That integrated model seems key.
Their ability to leverage that integrated business model across such diverse sectors appears to be a core strength, yes.
So what does this all mean for you, the learner? Hopefully you now have a much clearer, more detailed understanding of the key drivers behind Reliance's recent performance and their strategic direction moving forward, all without having to wade through those lengthy official documents yourself.
Yeah, hopefully we've distilled it down. And maybe this raises a fascinating question for you to consider.
Go on.
Given Reliance's increasingly diversified and integrated approach, across traditional energy, cutting-edge digital services, and this ambitious foray into new energy tech, how do you actually envision this unique combination positioning them within the rapidly evolving Indian economy over, say, the next decade?
A powerful mix.
What unexpected opportunities might they capitalize on, and maybe what unforeseen challenges might they encounter or even create as they continue on this transformative path?
Yeah, definitely something worth reflecting on as you go about your day.